is I want to introduce myself. I'm Cheryl Anderson. I am the Presbytery's business manager. I handle the finances and properties and the electronic equipment, whatever you have. I basically do that. I do have an MBA. You see the CCA by my name. That means that I'm a certified church administrator, so that anything within the administration part of church work, I am qualified to do. Also, I want to welcome you to the workshop. I entitle it Help. I'm the church treasurer. Now what? Because a lot of people get put into this position or volunteer for the position, and then they say, now what do I do? They just don't have a real clear view of what a treasurer does. So what I'd like to do first is just kind of, since we're a fairly small group, I'd like to go around and just have you introduce who you are and which church you're from, and perhaps just a sentence as to what you want to get out of this workshop. It gives me an idea of directions to go.
Okay. I'm Kathy Pinson from Emmanuel Church in West Lynn, and I've been the treasurer there for quite a while, but I haven't been able to attend one of these workshops, and felt like this was a good opportunity to come and just get some more information.
Thank you.
I'm Nancy Patterson. I'm from Community Presbyterian Church in Redmond, Oregon. I'm the administrator there for our church. And we have a new treasurer beginning January 1. So she is in the training process. So I thought I would glean as much information as I could to share with her. And perfect. I'm a part of all of those financial pieces that happen inside the church. So I've taken workshops from Cheryl before and found them very helpful.
Thank you.
I'm Sherry Barnett from Smith Memorial Presbyterian Church in Fairview, and I'm here because although I'm not treasurer, the treasurer is unable to attend, and chairing personnel as I have for the last 6 years on session, we make up the lion's share of the budget, and I'm interested in getting some information that will help us in the budgeting process, particularly around what we are required to report concerning the pastor's salary and housing. But I think all of it will be helpful.
Chuck Massar from Cottage Grove, First Presbyterian Church. I just volunteered formally last Sunday to take over the role of treasurer for a man that's been doing it for 16 years. He has the books on an old Excel spreadsheet that now that his printer has died, we can't print anything that's so old to replace it. We're going to be doing what I call jumping bareback in the middle of a raging stream. We're changing treasurers and going to a new QuickBooks system that we're told to inaugurate in the next few months. So I signed up for more than I probably bargained for. But it should be fun. I've got a background in MBA and that stuff, so I think I'm also looking for overview because I'm trying to raise the level of what the treasurer does in a small church. It's not just bookkeeping. There's a whole lot of things that should be tied into that, and that's what I'm trying to gather information on.
And which church did you say you're with?
Cottage Grove.
Cottage Grove.
Mm-hmm.
I'm Tam Moore. I'm from first in Medford and then the clerk. We're going through a financial team transition right now. The bookkeeper departed in the middle of July, and I thought I'd gather some information, give it back to the treasurer and finance committee so they can have some guidance.
I'm Dan Breen. I'm the treasurer here at Calvin in Tigard, and I've been the treasurer for I think about 12 years or thereabouts. I'm always looking for ways that, things that, oh, I didn't think of that. So maybe I'll pick up something new. I see there's a page, at least in the handout, about unrelated business income, so I'll be interested to learn a little bit about that as well.
Thank you.
We have one more.
Oh, yes.
My name is Tim Caton. The building at this end of the church is called Caton Hall. My dad was the founding pastor here, and I remember as a kid coming into this church where we first started. This was the original church building. Yeah. I remember one day on the summer, there was a fan sitting here by the choir loft, and it fell off. There was a bit of a breeze, and the fan came crashing down. I'm just a small part-time pastor at the First Presbyterian Church in Lebanon.
Great, thank you. I appreciate knowing all that. I do want to say that as I go through the slides and the presentation, if you have any questions, please don't hesitate to raise your hand and ask, because we have found that whatever information that you're seeking, probably somebody else can benefit by it also. So don't hesitate to ask those questions. The workshop is an hour and a half. We will take up most of that. I will try and get through as much of the material as possible. And as I said, the little manual that I gave you has a little bit more in-depth of what I'm going to be presenting. So if we don't get through everything, you have the information. And I'm always available to be able to answer your questions. So first off, let's start out with what is a church treasurer? It might be something that you think is a simple question, but it really has a lot of depth to it. The main function is the treasurer is involved with the financial activities of the church. So what does that mean? It means the financial functions are they get involved with the offerings, investments, endowments, loans, grants, personnel, insurance, risk management, and taxes, local, state, and federal. So those are the components that basically the building blocks of what a treasurer is responsible for doing. We look at also the treasurer's duties come from a position that is required by our Book of Order. In G-3.205 of the PCUSA Book of Order, it gives directions to the church session for the election and responsibilities of the church treasurer. And it is the responsibility of session to elect this person. And that person needs to be able to take care of the offerings, financial books and records, and periodic, but in no case less than annual, report all the financial activities to the session. And then the session has final financial oversight. The treasurer may or may not have corporate responsibilities. All states allow churches to form a corporation, and the Book of Order, G-4.0101, directs that a church should be incorporated whenever permitted by civil law. And in accordance with state laws and the bylaws of the church, they include the role of a treasurer at the corporate level as an officer of the church. So those are kind of the components that we see here, is that the church may be incorporated by the state. The corporate treasurer is an officer of the corporation. Now the corporate treasurer may be the elected treasurer of the congregation, but they could be separate. You may have a member of your session acts as the corporate treasurer and makes all of the reports that are required to the various governing bodies, the governments of state, local, federal. Your elected congregation treasurer is responsible for the financial reporting and oversight of the congregational finances. So they may be one and the same, but you may have a separation of those duties. Now, the corporate treasurer has a little bit more liability with that. They have to comply with all the state and federal laws governing the fiscal activities of the corporation.
I have a question.
Yes.
How many churches in our presbytery have treasurers that are bonded?
Very few that I'm aware of. It's not a requirement, but one of the things that a treasurer should insist upon to their session is that the church has officers and directors insurance coverage. And that basically would
Cover that bonding.
cover the corporate treasurer. So that would help minimize any liability and risk of that. Now, the corporate treasurer also is accountable to the body to which they were elected. So the session is the body that elects the corporate treasurer, not the congregation, but the session. And that corporate treasurer is accountable to the session at that point. Here are some of the qualifications of a church treasurer. The treasurers are elected by the leaders of the church. They're not elected by congregations, they're elected by the leaders. They should be able to work cordially with other people, other congregants, outside vendors, outside sources, whoever they come into contact with. So they need to be able to work with other people. They should also have a general knowledge of financial processes. That doesn't mean they need to be a CPA, but they have had some financial background. They might have been a bookkeeper, they might have taken some bookkeeping or accounting classes, but at least they have a general financial knowledge that they can understand how to put together financial reports. And an important piece is that the character of a treasurer should reflect Christian ideals, which means that a church treasurer should monetarily support the church through tithes and offerings as a show of good financial stewardship by example. The length of service. Now, I know that this is kind of one of those questions. Well, how long should a treasurer be in office? Well, that's dependent upon the bylaws of the congregation. If the congregation doesn't have any specified terms, then they're there for life, possibly. But if you went with the PCUSA, conform with what their terms of office are, they recommend a service of serving no more than 2 consecutive 3-year terms for a total of 6 years. Now, the benefit of having a longer term treasurer is consistency. You know how they work, what you're to expect, those type of things. But it also, we have found that if you have long-term treasurers, there's a much higher risk of malfeasance because they can cover it because they're a trusted employee or volunteer. An alternative is the flip side, is annually the treasurer is elected. And this would be where the session has a chance to review the performance of that treasurer, and if they are not meeting expectations, then they are not re-elected, and someone new would come in. So there's pros and cons to each part of this. Okay, now we're getting down to what is the principal function of the church treasurer. And that would be, they are responsible for the proper receipt, accounting, and disbursement of church funds within policies established by the church for adequate financial control. And those are established by session, the leadership of the church. The general financial responsibilities are, they usually are responsible for accurate records. They may have someone else that they work with, like a bookkeeper or someone else in finance, but they are the responsible person for producing those records in an accurate and timely manner. They are the person that reconciles monthly statements. As a piece of internal control, and we'll get into that in a little bit, that the person that generally handles the cash would be not the person that handles the bank reconciliation. There we are getting a little bit closer to malfeasance. Now, they also sign checks, and if you have a larger pool of employees, you can set aside your check signing for the treasurer and reconciling monthly bank statements to someone else. That way you get a little bit more separation of duty. But in small churches, this is in general what you should be looking at. They produce monthly and annual reports, those are financial reports. They maintain contribution records, and sometimes I have seen even the treasurer's position separated with the contribution records to a financial secretary. So this is all dependent upon how your church operates, what are in your bylaws. But these are just in general what the treasurer will do. If they do maintain the contribution records, then they are also responsible for preparing the contribution statements at the end of each year. And as a financial person, they should have a general knowledge of investments and being able to suggest possible investment opportunities. And overall, they need to be able to, they're responsible to instill a high level of financial confidence so that not only the session, but the general congregation is confident that the financial information that they are receiving is accurate and that it is timely.
And confidentiality piece also comes into play when you're working with your congregants.
Yes.
I have found that very important.
Especially if you're working with the contributions.
Absolutely.
You need to be able to keep that information in a confidential manner.
But as far as the transparency of the expenses, that needs to be shared and
Yes.
reported. So
Yes, as transparent as you can get is kind of the key word here. That way there's no talking behind scenes about, well, we don't think that person is doing the best job because we don't know what's going on over here. So yes, that's where the accurate records come in, transparent. We want to be sure that everybody understands that you're handling their money in the most effective manner for the church.
Cheryl,
Yes.
we require, and I think this goes back quite a ways at Smith, 2 signatures on every check that's written. Is that fairly common in Cascades Presbytery?
It's fairly common. I've seen where it depends on the number within the church. The small congregations may not have that capability, but overall the recommendation is that you have one signature that's different from the person that's producing the checks. And then if you get to a higher dollar amount, it might be over $500, $1,000, whatever you choose, then require double signatures at that point. And this then becomes part of your audit financial review process, is determining are the check signing procedures being complied with. I'll get into that in just a little bit. And then there are a couple other ones that are not on here that need to keep church staff at appropriate committees informed of any changes in fiscal matters. That means if the income is not coming in quite as you budgeted, you're going to have to make some changes, and that information needs to be communicated down to the other staff, to the other committee members, so that they can adjust their spending or their budgets accordingly. And then a requirement also is a financial review. The treasurer is responsible for submitting the records to the appropriate committee or an outside audit firm. And then a key factor that you probably need to keep in the back of your mind is that you need a backup. You need to train an associate treasurer. What I call succession planning. And if you have term limits, you might be training your replacement in that regards for them to be elected to the next term. So you need to be having someone else come alongside you that can understand what the process is. The treasurer also has working relationship with other people, as I had mentioned. They are an ex officio member of the Finance Committee, which typically means they have voice but no vote within the Finance Committee. The Finance Committee needs to make those decisions, but can take suggestions and recommendations from the treasurer for actions.
Is that on the assumption that the treasurer is a paid staff position? Or would that apply to volunteer?
It would also apply to a volunteer. So depending upon the structure, if you have a volunteer member, that's a treasurer, they are a member of the Finance Committee, but in an ex officio manner, because they're handling the financial operations, maybe the day-to-day. And that needs to be separate from the decision-making, which is where the Finance Committee comes from.
That's a piece of that division of responsibility.
Yes. Yes.
Okay.
Also,
You mean separating the check signing, the balancing of the bank statements, that sort of thing? Okay.
it might
We
be.
do the separation of duties a little bit differently here at Calvin. We have a bookkeeper, our office manager also
Yes.
handles the bookkeeping
Good, thank you.
function. And monthly, I'm a volunteer position as the treasurer. I come in and review the bank statement. She does the reconciliation, but she does not have signature authority. So I'm one of 3 authorized signers. The check preparation process includes an approval generally by the pastor,
Good.
so that he knows
Thank
where the money's going, just an initial type of thing. And then the bookkeeper prepares the checks, and either I or we have 2 other authorized signers comes in and signs the checks. So I don't have hands-on with the bookkeeping software. It's more of a supervisory function. But I sit on the Finance Committee and I vote. So that's why I brought up the question. So I agree, it should be separate. We need to maintain separation of responsibilities, and I think we're okay there.
It's left
Tell
up
me
to
if you feel differently.
the churches. They may have a different
Yeah.
process and policy,
Yeah.
but it sounds like you have good internal controls in
Yeah.
place. This is generally what is recommended. You may have a different process, which is just fine.
Yeah.
Works for you, it gets the job done, and it satisfies all of the regulatory requirements.
Yeah. Thanks.
So what I'm looking at right now is giving to you in a treasurer's capacity is more in a bookkeeping environment. It may be just a little bit level up in an advisory or a supervisory type. So it's kind of a mishmash. It's not exactly this animal or it's that animal. It's kind of a conglomerate.
Yeah.
So you're just going to have to take this information and customize it for your own needs. These are just general guidelines. So going on with this, treasurer would receive a receipt summary from the counting committee, which is completely different from the treasurer. Treasurer has nothing to do with counting the money, but they do get the summary of what was offered for that Sunday. They work with a financial secretary if you have one. As I said, you might separate the duties between the basic expense and operations with the revenue, which is your tithes and offerings, and special contributions. They communicate all financial matters, and they administer the financial detail of church projects. So typically, a treasurer would handle the revenues. If you have youth activity and you have registration fees, they would be the one that would handle that. On the flip side, they would be the one that would handle the expenditures too, just to make sure that there's a balance there. You don't have excess expenses to what was coming in. And they are the financial advisor to committees and groups, which means that this is the person that will tell those committees that they are not on budget, they need to cut back, and need to really pay attention to their dollars, their figures. So that, unfortunately, there's good news and there's bad news that they get. The church treasurer is also primarily responsible for record keeping the accurate financial records of all funds in the church. Now, I know that there have been some churches that have a women's group and they have a separate bank account. There might be a youth or Christian education that have separate bank accounts. The treasurer is responsible for recording all of the information into a general ledger bookkeeping system so that the congregation knows on a periodic basis, no less than annually, what those various committees are doing, even though they have their own bank accounts. We also would like to see your financial records. Keep them as simple as possible, which means you have just revenue and expense and the investments and the contributions. So that what you're recording is just those information, but you want to make your reports as simple as possible. You don't want to go through detail daily, we received this was paid. It might be during a month, this is how much we received, this is how much went out, and investments, this is how much our earnings are. Those are the type of things that you are looking to keep information on.
Can I ask of the others here, how do you keep track of designated contributions, designated money? Do you do that how do you do that within your financial accounting system?
Well, I can speak for Smith somewhat. We have a very complicated accounting system that was introduced when we hired our last bookkeeper, because he comes from a very large church, not Presbyterian denomination, and he introduced fund accounting to us.
What software do you use? If you don't remember, that's not important.
They have tried to use church windows, but that does not work for fund accounting. So we have details for each of those designated funds, and monthly receive what, if anything, additional came into them or went out. but we carry them on as our assets.
Right. How many different funds do you have?
Oh, wow. We must have 10,
Okay.
10 or 12.
And do you budget for each of those funds?
We budget, I should say, we take into account potential earnings from those funds and then decide if we're going to need to spend them or not in order to keep our bank account at a certain level. Otherwise, it just goes back into reinvesting. But we have spent, for those that we're allowed to, we have spent the interest in past years.
So some of them are permanent funds,
Yes.
like an endowment or something
Mhm.
like that.
Right.
Okay.
And I'll get into that in just.
Oh, you will? Oh, okay.
I'm headed that direction.
Okay.
Okay. We've talked about keeping records. Okay. How many of you are familiar with the Sarbanes-Oxley Act, 2002?
Used to work in a bank.
Yeah. There is a requirement of all organizations, and it's section 8.02A of the Sarbanes-Oxley Act, that requires all organizations in public, private, nonprofit, which includes churches, to have a record retention policy. And this was brought about, if you remember, by a number of highly publicized and high-profile misconduct of several large corporations in handling their financial and record keeping. So this was developed, and the Sarbanes-Oxley Act makes it a crime to knowingly alter, conceal, cover up, destroy, or falsify documents or records to prevent the documents from being used in a legal proceeding. The session has the responsibility to identify documents and records of the church and to manage them, and every type of document that conveys information about the operations of the church by the development of a written document retention and destruction policy. I would not be surprised if you're not aware of this, because it's just not one of those things that come out, but it is a requirement. And if you have any questions about how do I put a document retention schedule together, there's a couple resources that I have given to you. In the back of your manual there is a sample, in one of the appendix, of a document retention policy. And if you want to see one that's in place, the Presbytery has a document retention policy that we have put in the document and form section of the website. So that gives you a starting point if you need something to go by. But I do think that you need to be aware of this, and it is a requirement by law, so we need to be in compliance with this particular aspect. We're going to talk now, going a little bit further into contribution records. As I had mentioned, the responsibility to oversee all the recording of all member gifts into their own personal contribution records, and to provide an itemized year-end contribution statement of contributions received by check or single cash contribution amounts over $250. You may want to also include a contribution statement of all the aggregate contributions, which would be maybe a $10 here, $25 there, but it is over $250. I do want to point out that churches are not required by law to provide a contribution statement or to acknowledge that they have received a contribution. However, if you do not provide this to your donor, they are not able to take their donation as a tax deduction. So those are type of things that you just kind of need to keep in mind. The IRS does not provide any type of form for contribution acknowledgments. So you do need to keep that in mind. But they do require, if you do provide a contribution statement, there's certain things that need to be included in it. In a written contribution acknowledgement, it must contain the name of the church, the amount of cash contribution, which includes currency, coin, and checks, and a statement, and this is the key here because there's been many contributions that have been thrown out through audits because they haven't had this statement contained. They must say, no goods or services were provided for your contribution other than intangible religious benefits. That has to be a statement included in all your contribution statements.
Wow, I don't think Church Windows has that
Yeah.
in
You
their
also need the
program.
tax ID. You need to
Right.
You can
to
put
have
it
the
in.
church's
Yeah,
tax ID.
Yeah.
yeah.
Were you aware of that requirement?
Yes.
It's not listed, so
No.
you might want to include it then in there. Okay.
It's not a requirement, it's a suggestion
Oh,
at this point.
it's not a requirement, you understood it as a requirement.
It is a requirement.
Is it?
Yeah.
Okay.
It is now. The chair is, yeah.
There's been a lot
Tax
of
ID,
changes
yeah.
and I'm just still trying to keep on top of them. I will make that change to this.
Excuse me, it's a requirement for non-cash receipts.
Right, and that was the next thing
Yeah,
that I was
yeah,
going to
okay.
talk about.
Oh,
Sorry.
Non-cash or tangible contributions do need to have the tax ID plus this information. And in non-tangible contributions, you do not include a dollar figure. You just say, the church has received this and from whoever, and record this type of information, the name of the church, tax ID, the item that was donated, and then you need to include the statement also, no goods or services were provided for that. Another,
For the non-cash, non-tangible, you cannot put an amount, is that what
you
you
cannot put an amount. No. That is left up for the donor. The same thing for if you receive stock as a contribution, you cannot put the value of the stock. You can put on the stock the day that it was sold. You received it and it was sold. The high and the lows for the day. Now, it's up to the donor to make a determination, okay, I donated it on this day, but it was liquidated 10 days later. The donor has the option then of proving that on the day that they donated that, the value was between these levels.
But that's their responsibility.
That's their responsibility. You do not provide, okay, when we liquidated it, it was this dollar amount. No, you provide a high and low, if you want to provide anything at all. Other than you could say, we received 10 shares of General Electric stock on such and such a date from whoever. So those are left up to the donor to prove the dollar amount of that donation. And they need to have documentation for where they're coming from on those figures. A lot of times they may just go out to Morningstar and print out a Morningstar page that says, on what particular day, this is the high and this is the low. So those are the type of things that need to be aware of in regards to contributions. Now we'll take a quick look at financial operations.
Before we leave the stock donations, we have some members that from time to time will donate stock And as part of their fulfilling their pledge. So if we give them a receipt, we handle it differently from what you just described. So if we give them a receipt for a non-cash donation, then that would not be included in our statement of cash contributions at the end of the year. So that statement would look like they haven't fulfilled their pledge when they have.
Pledges are generally cash contributions.
Yeah.
So that's why
Thanks for bringing that up. We'll have to.
stock is a tangible type of asset.
Yeah.
It has a value beyond what normal currency has. So you would probably need to provide them two different contribution statements. One that says the cash contributions through cash coin or check, and then the other one which is the tangible contribution of stock.
What we do now is, in all cases, we have the donor have their broker communicate directly with the church's brokerage account. So the stock is transferred.
Right.
They call us, they have standing orders to sell because we don't hold stock. And then then we know what the value, and we have them tell us what was the value on the day received. They give us the high and the low. And then how much the church realized on the sale, which could be a couple days later.
Right. And typically that's why you want that high and low.
Yeah,
In there,
yeah.
because-
But we've been treating that as a cash donation, so we'll have to look at that. Thanks for bringing that up.
Okay, some of the financial operations we look at are the bookkeeping method, fund record keeping, which you had questioned, and bank reconciliations. So, jumping into bookkeeping method, there's basically two different types. There's the simplified method, which is what we call the cash basis. That means when you count for revenue when it comes in, and you account for the expenses when they're paid. That's as simple as it. Cash in, cash out. And you record that as your revenue and expense. The complex method is just exactly that. It gets a little bit more complicated in that you use different vouchering systems. You can use journals and subsidiary journals. Transactions are posted into these journals, and the general ledger is categorized by fully defined functional chart of accounts. The complex method also is a double entry bookkeeping method, which means that you have debits and credits. And debits and credits, all it means is debit is your left and credits are your right. So there's nothing fancy to that other than the name. Typically, the complex method uses the accounting method known as accrual basis of accounting, which means that you recognize your revenue when it is earned, not when the cash is received, and you recognize your expenses when they are incurred, not when they're paid. So you can have expenses incurred in one month, but you don't pay them until the next. And your revenue is recorded as it is incurred or received, which it could be your pledges. You have pledging at the beginning of the year, beginning of the year. So in January, you know what your pledges are. You set those up as receivables, and this is your pledge, a dollar amount. Might be pledges can be set up to where they're a monthly distribution. Somebody gives 1/12 of their pledge each month. Those are the type of things you need to know in a more complex system. But pledges are basically the way the accounting world looks at it. Pledges are promises to pay, almost like an installment. If you can prove that it's a very discretionary type of process, then you can get away with not having to book pledges. But in general, most everywhere that takes pledges have to record them as revenue. Fund record keeping. This is what you were talking about. Specific designated use of funds and setting up different accounts for those uses of funds. These are just a few of the more utilized funds within a church environment. You have overall your general and your current funds, which are your operational funds, ones that you take money in, money out on a day-to-day basis. Those are your general offerings and deposited into that account, and then your expenditures, your normal operationals, your utilities, your payroll expenses, those type of things. Your restricted funds, you may have a separate account. It could be a bank account, or it might be just a different fund within your accounting system. But those are gifts that are received for a specific item or program. An example might be a building fund. You're going to go through an expansion or a remodel or something. So you have a capital funds drive, and all the money that comes into that for that capital project goes into that fund. Those are donated for a specific purpose, which means they can only be utilized for that purpose. So if they go into a building fund for an expansion or a remodel, that's all you can use those funds for. If you end up at the end of the completion of the project and you have funds left over, you have to kind of go back to the donor, probably the latest ones that made donations to that, and ask them if they could redesignate that or place them in the general fund. But you have to have a donor's authorization before you can make any changes to restricted funds. Restricted funds may be restricted to a time. I have a grant comes in, and it's a 2-year grant, so you have 2 years, and once at the end of 2 years, if you have money left over, typically the grant, you got to give it back. Or they might be project oriented, as I said, a building expansion or remodel. The main thought here, the main thing is that you need to take away is that restricted funds can only be used for what the donor specified. They cannot be used for any other purpose. So if you have, as I said, leftover funds from that project, you're going to have to go back to the most recent donor and ask them to redesignate.
We have given each one of those temporarily restricted funds a guideline. So when our audit team comes back and audits the books at the close of the year, then they can go to that fund, they can see what the expenses are supposed to be used for that fund, and then they can go and look at what the expense, if they followed the guideline, so they match. They're spending the money like they're supposed to be, as per those instructions and guidelines.
The requirement to get permission from the donors for unused funds at the end of a project, or maybe for a program that's no longer functioning. Is that a general accounting principle requirement? Is that
It's a legal
requirement?
It's a legal requirement.
Okay.
You can, though, specify when those donations are made and they sign the contribution to them, that they agree to any funds that are left over after the project is completed will be reinvested into a general fund or a different project or something. But they have to sign off and agree to that. That's the only way you can kind of get around that. Otherwise, if you have a project and it's complete and you have $2,000 left over, that $2,000 has to stay there until you have a similar project. Say you have a church expansion or remodel and a building fund. That money would have to stay until the next time you do a remodel or capital improvement project.
Is there a dollar threshold?
No.
So someone contributes $1.
Yep.
Okay.
Yes. These are legal requirements.
And you're saying that you go back to the most recent donors?
I would go back to the most recent because the idea is that those funds that are contributed first are spent first.
Right, right.
So it's kind of first in, first out.
And you ask if they would want it to be redesignated, and if not, then the money's returned?
That's an option.
Okay.
My recommendation always is try and get them to redesignate it,
Yes.
but it is an option that they can ask for it to be returned to them.
That's a huge project. If you have all those little monies out there
Yes.
that you have to try to clean up
Yes.
to redesignate to another project. So it's best that that be done prior to.
That's
Or
why
right when
I
that comes
mentioned
in.
that if you're going to have somebody that contributes to a project, that they sign off on that. I am contributing to such and such and understand that if there are funds left over after completion, that I give permission for them to be done, going somewhere else.
Yeah, and I could comment. I was part of the finance committee at Westminster Presbyterian Church in Medford, and we had an embezzlement. And part of what happened was the accounting did not have a separate account for those designated funds, and our insurance company ended up making good about $250,000. It was really a horrible kind of experience.
Going on to the next one, non-budgeted mission funds. These are kind of special monies that come in for special offerings. They could be like one great hour of sharing, Pentecost offering, something that is specifically a denomination offering. What happens on those is they are designated to a particular fund, like one great hour of sharing. They come into the presbytery. The presbytery gathers all of those like type of offerings and sends them on to PCUSA for that particular mission project. So those are non-budgeted mission monies that come in, but they do support mission. And then the last one is endowment funds. Endowment funds are gifts that are received that have been so restricted, they are permanently restricted. The corpus of it, the principle, it stays intact, but the donor can specify how they want their earnings to be spent. They can specify the earnings go to youth projects, or it might go to a capital improvement project. As an example, the church receives $25,000 that is being put into an endowment, and the donor specifies that the earnings will only be used for scholarships to members of the church that are preparing for ministry. I mean, they are just making that a tight type of restriction.
Question. Somebody gives $25,000 and it goes into the church investment pool, and lo and behold, the stock market crashes and it's worth $20,000 in the next year. And then it comes back the following year where there's a little income. Can that income be spent and then, or does it have to get back up to the $25,000 initial contribution before any money can be spent from that endowment?
You can spend that because the stock market might stay down for a while. The way that it is handled through accounting standards is that you keep the corpus the principal of $25,000 on your books. If the value of that drops down to, let's say, $20,000, you have what's called a $5,000 unrestricted loss. And those pieces need to be kept separate. You, on your books, show a donation of $25,000, and that's an asset. But the investment of it changes value. But you still have to keep that original corpus intact. So that, that's just the way it works. You have to record that loss on a year-to-year basis. And if it goes up past $25,000, you still have a permanently restricted $25,000, but then now you have a temporarily restricted amount for the additional amount. Let's say it goes up to 30. So your original $25,000 is still permanently restricted, but then you have a temporarily restricted amount of $5,000, which means that that amount could be pulled out of that investment and used for the purpose that it was specified. But you still have to retain a $25,000 permanent entry on your books.
So if in that example, the investment drops in value to $20,000 and comes partway back, say to $22,000, you couldn't spend that $2,000 increase, because this might happen over a several-year period, right? And so you couldn't spend that $2,000 gain because you're still below the $25,000
Right.
original donation.
Yes.
But you can spend any dividends.
You can spend, right, you can spend the earnings, the dividends, interest, as specified. But you still have, as I said, you have two types of entries. You would have permanently restricted for 25, and then if it's lost value, you have a temporarily restricted loss. The gains, you have a temporary restricted gain. So that's basically how the accounting of an endowment works for gains and losses in market value. Well, let's kind of move on to the next one, talking about bank reconciliation. I'm going to just kind of highlight this real quickly because I'm sure that most of you do bank reconciliations, which is reconciling the checkbook and the balance in the cash ledger account. I propose, and this is a preferred format, say I'm going back to my audit days, this is a preferred format that CPAs like to see when they do audits. It's a 4-column format, and it is in, a copy of this is in the manual that I have provided. The idea is that you're reconciling your bank adjusted balance to your general ledger adjusted balance. And if you see the areas that are in bold on each of those columns, you see that the adjusted bank balance, general ledger balance, and the adjusted general ledger balance are in sync. And that you record any outstanding checks on this reconciliation, and that goes right up into the outstanding check line. I'm not going to go over this any further, but if you do have any questions on this format, do let me know, and I can go over it a little bit more in depth with you. As we had said, there are 5 reporting responsibilities, as mentioned, financial, governmental, and payroll. The first of these is financial reports. You present your financial reports to session. This is a very simplified version. A lot of session members may not have a significant financial background and don't understand all the detail of a financial report. So just a simplistic report that they can understand is month of, let's say, November. And for the month, we have had receipts of this. It means money in from all places. Disbursements, expenditures that go out all places. And then this is your cash balance. Money in, money out and this is what your cash account ending balance is. And then you can make it a little bit more detailed by adding your year-to-date. These are how much receipts have come in for the year. This is how much we have spent. And those two cash balance lines need to match. And this is a requirement, as I had said earlier, by the Book of Order, G-3.0205, that this report that goes to session is provided to congregation for the decisions that it has made in regards to the cash reports that it has received. So, as I said, the congregation should receive financial reports on a periodic basis, but no less than annual. Government, yes.
That cash balance then would include restricted and unrestricted.
Yes, it could, but in general, what I have developed this for is just your general operating
Okay.
account. You may want to do this for each of those. Your restricted accounts, which if it has a separate bank account, or however you want to separate it out. I mean, this is just what I call the down and dirty financial report. Cash in, cash out, and balance. Governmental reporting. So we have a few things that we do need to get to the government. Probably all aware that there are payroll taxes that are withheld from employees' pay, and those need to be deposited with the appropriate governmental agency, federal, state, or if there are even local, sometimes there are local taxes that need to be deposited. And in the Portland area, and I know in Lane County, there are the mass trans tax for TriMet in Lane County. I can't remember the name of that transportation district, but those type of reports. The federal Form 941 is a quarterly filing of your payroll information. It just is a summary of here are the employees, here's the earnings, this is the tax that has been withheld, and this is the tax that is due. Not only for the employees, but the employer portion also. The annual W-2s, which come out in January, and you have to have them to the employees no later than January 31. Now, for this next year, the employer reports of the W-2s have to be to the governmental agencies by January 31. Previously, they were allowed extra time to get them to the governmental agencies in February, but now with electronic filing, they require everything to be filed electronically, and January 31st is the filing date. You need to be aware of Form 990. This is the income tax form for nonprofits that have unrelated business income, and it needs to be filed along with any tax due.
Are you going to talk some more about unrelated business?
Yes. Very briefly, but I will get to it, hopefully. If not, there is some information in your email for that. You also need to keep records of your payroll personnel. These are just some of the things that need to be kept in your personnel files. Letter of employment, any background reference check, information on date of hire, wages, exemptions, W-4 form. What I suggest is maybe a new hire checklist so that you know that you got all these for those people. You need to have a completed I-9 form. However, you are not to keep your I-9 forms in the same personnel file as your personnel information. This is a requirement by Homeland Security. It's an immigration form, And they can come in at any time and say, I want to see your I-9s. And if you have to sit there and pull them out separately, that's not a good thing. So keep your I-9s in a separate file, preferably even in a separate file cabinet. But they need to be separated. Additionally, I'll go along with this, get into benefits and information that are filled out for your medical care, that you provide, any of your other benefits, pensions. Anything you have that is health care related needs to be kept into a separate file also, so that your benefit forms, if you have just an enrollment form for healthcare benefits, that's fine. You keep that in your personnel file. But if it has any background questionnaires for health conditions or pre-existing conditions, that form has to be kept in a separate form file. If you have anybody that has had to have physical for insurance purposes, and you get that report, that goes into a separate file. If you have somebody that has been out ill and they have a doctor's okay to return to work, that goes into that health file. Drug testing. If we have anybody that has had drug testing, that results has to go in that file. This is a requirement, legal requirement, regulatory, by HIPAA, which is the Health Information Portability Protection Act.
And did you say that needs to be a separate file from the personnel file?
Yes.
Okay.
Yes.
But of course by individual.
By individual.
So separate set of files.
Yes,
Yeah.
separate set of files.
Okay.
To say your I-9s, typically you can put into one file
Yeah.
elsewhere. Your healthcare, health situation, conditions, information has to be in a separate file. You can have, like, your personnel information in one drawer and your health information in another drawer, but they are not to be in the same folder.
So let's say you have a workers' comp file, for example, which would be separate.
Yes.
As long as that employee is active, then you would keep that, again, in a separate file.
Yes.
As far as former employees, do you follow the same retention record as you do with
Yes.
their employment file?
Yes, that's
But
considered
keep
part of
it
their
separate
employment.
also?
Yes.
Okay.
So the recommendation is just throw out there 7 years, 10 years, whatever it is, for personnel information. That does become part of personnel information. It's just that it has to be kept in a separate folder. And if you have a former employee file, you might have drawer 1 is current, drawer 2 is the former employees, you can then put it in there. Or you might have a box that you store in a storage cabinet or a storage closet. That could be. But they still need to be retained in separate folders.
Okay.
Sure. The small church I serve, I'm the only employee, and it's all designated as housing allowance. What is required for the church to file in terms of taxes, these forms?
I'll get into that.
Thanks.
So your great questions, you just kind of a little bit ahead of me, but we'll get into that. So just a few other things on here. You want to keep track of sick time, personal leave days, sick vacation time, and time cards. And I'll get into time cards in just a little bit because the situations have changed where it becomes more important to do that. We're getting down here to just a few minutes, and there is more information that I do want to go through. I'm just going to hit on internal controls real quickly. There's more information in your manual on internal controls, and I would encourage you to look that over. But internal controls generally are a system of checks and balances and processes that direct, monitors, and measures a church resource through effective and efficient operation in one of these following categories: operational, financial, annual financial review, and budgeting. So, organizational controls, the structure, performing the work to a common goal, to setting priorities and objectives designed to achieve those goals and objectives. Financial controls, we have talked about these briefly. Segregation of duties, transaction authorization, bank and investment statements, secured property, document retention, numerical sequencing, and budget review. If you have any questions on any of that, just give me a call. Annual financial review. I do want to go through that real quick. It is a requirement by G-3.0113 in the Book of Order, and it says that a full financial review of all financial books and records shall be conducted each year. And a financial review is not an audit. An audit can only be performed by a licensed CPA. The financial reviewers will evaluate the records, financial records for reasonableness, and the benefit of financial review is that the congregation is assured that contributions and gifts are being handled appropriately. Documents that you need to provide in a financial review, these are, but it's not limited to these, there are others. I have others listed in the manual, but there's still more if it's applicable to your church. But in general, you need a chart of accounts, check register, bank statements, copies of deposit slips, accounts payable journal, payable vouchers and invoices, payable journal, and tax reports. Budget process is allocating resources toward goals by expressing the church's focal dream in dollars. Word of caution, a budget is just a best guess. It's an estimate. They're not real dollars. So when somebody says, well, how much do I have left in my budget to spend? You have to let them know that they don't have that to spend as such. It's just a best guess of what they had anticipated was going to happen during that year. If they've already had an event and they've gone through revenues they've received and the expenditures have already been paid, they basically have no additional dollars to spend because the event has already been held. But yet they might have $500, $600 unspent from the budget. So you just need to be cautious when you talk to your committee that they understand this is not money that they really have. This is just best guess of where they think they're going to be monies in and monies out. So the question comes up, then why do we budget if it's just a guess? Because it's time consuming, it's difficult, and it doesn't reflect an actual spending, and it's rigid and controlling. All it is it's just accounting of crystal ball gazing. As I said, it's your best guess. Okay, here are the reasons for planning. It reduces erratic spending. It's a performance evaluation of those committees and staff. Are they handling their budgetary concerns correctly? The financial control. You don't just let somebody have pie in the sky budgets. Be realistic. It's a way to communicate and coordinate the dollars within the entire church. You get member involvement with budgeting. They understand what the process is and what they do have available that they could spend, given the best estimate for that particular project. It's also a commitment to giving to your congregations. You have a budget each year. The congregation is committed to that budget. Though I do have to tell you that the budget is set and approved by session. It's not a congregational action. The session only presents the budget to the congregation and they can vote to endorse it. They don't have the authority to change a budget. They can suggest changes to session, and session can review it and make those changes. But a congregation does not have the authority to approve and change it. So please be careful with that. It also, a budget gives confidence to church leadership that they are handling the dollars that are given in a manner that are the way they are intended toward the goal. It will show any operational surplus or deficits. You have a budget. How are we doing toward that budget? Are we always off a budget? Are we significantly under? Those type of things. And you will need a budget if you go to the bank and want to lend or to have money, borrow money from a lending institution. Those type of aspects. There are several different methods. Line item budget, which is allocated regardless of ministry. You have a line and say this much is going there. You have allocations based upon mission, and you categorize and prioritize your mission, or you have a zero-based budget where you start at zero each year and build the budget. That's the most difficult one. The line item is one that is mostly used, and the zero-based is the one that is most complex. Now we're getting into personnel. This is kind of an area that I wanted to spend just a few more moments on. Probably pretty much the rest of the time that we have. A lot of this is in the manual, so I will go quickly because we've just got about 10 minutes left. There are specific tax rules and employment classifications that apply to teaching elders. They are a member of Board of Pensions. They have to submit to their governing body, to their council, session, whatever your leadership is, the annual form, Board of Pensions, ENR 111, could even be your personnel committee. But the pastor, teaching elder needs to fill this out, and it needs to be signed off by the leadership, person in leadership of the organization. Okay, comes out to the question of self-employed or employee classification. That's a really complex one because they are both. For federal tax purposes, they are an employee. For Social Security purposes, FICA, Medicare, Social Security, they are self-employed. So they have to pay a double portion of that, both the employee and the employer portion. And you're asking about the housing allowance. The housing allowance has no taxable effect if you can substantiate the amount of housing that you're asking for. You don't have to have any salary. You could have only housing if it's reasonable. And the IRS looks at the standard rental rates in the area as far as whether that's a reasonable housing allowance or not. And then you have effective salary. Effective salary comes in and figuring out the Board of Pension dues. And the effective salary includes the annual cash housing, the annual cash for your salary and housing allowance, SECA, which is the Self-Employment Contribution Act, and accepts 50% of the estimated liability. Any deferred compensation, if they are given a mass, or any other allowances that are unvouchered, like an auto allowance or medical deductible. That it plays into your effective salary. Then for all staff, you have W-2 reporting, imputed value of life insurance for coverage over $50,000. You need to take and consider if you're providing cell phones, That is much less of an issue now than it used to be. Prior to 2011, it was considered a fringe benefit, it was taxable. Now it's just considered an operational cost. But you need to be sure that you keep track of that because there are specific dollar amounts that can apply to that. Expense account reimbursements, you want to be sure that you have a vouchered system to where the teaching elder makes expenses and they submit receipts. If you provide, let's just say $2,500 as an auto allowance, but have no way of keeping track of that, that's considered taxable income. So you need to keep track of that. And you need to determine whether your staff is exempt or non-exempt. And that kind of leads me into the next one, which is where I want to basically spend the next few minutes. This is a very important change. And you need to know that starting in December 1st of this year, which is a couple weeks away, there are new rules for weekly minimum salary for exempt employees. So what is this new rule? It was signed into law on May 18th by President Obama. It makes changes to the Fair Labor Standards Act, or FLSA. Minimum weekly salary for exempt employees. The old was $455 per week for $23,660 annually. The new is double that, $913 per week or $47,476 annually. This is important that you pay attention to because it does not take into consideration part-time employees. If you have a 50% time employee, it makes no difference. They still need to make $913 a week to be considered exempt. So you need to be sure that you have your exempt statuses categorized correctly. So that goes into the next question. Who is an exempt employee? There are 3 categories: executive, administrative, and professional. This is information that's contained in your manual, so I'll kind of just highlight this. How do you qualify, or how is an employee qualified as an exempt? They must satisfy a duties test under the EAP, Executive, Administrative, Professional categories, and pass the salary test of $913 a week. So these are the duties. They primarily manage a distinct unit, spend over 50% performing management duties. They meet that new minimum weekly salary. They supervise 2 or more full-time equivalents, that's FTEs, and they have hiring and firing authority. Decisions significant to the organization. That's an executive. The next one is administrative. They perform office or non-manual work related to management policies and business operations. They spend 50% of work time performing those management duties, and they meet the weekly minimum salary requirements. And they exercise discretion and independent judgment of significance to the organization. So they don't have to supervise anybody, but they still need to contribute. A professional. These are starting to get into your artists, your organist, pianist, might be a sound technician. Those are your professionals. And it requires advanced knowledge in that area. They have specialized instruction. Their work is characterized by imagination, creativity, originality, and they meet the minimum weekly salary. So, the salary test, there's components to that besides the $913. It must be a genuine salary based on hourly, or not on, rather than on hourly. Or any other method, like in the garment industry, it's piece by piece. It has to be a set amount, and it's predetermined amount not based on quantity or quality of work. It's, you're working, you get your job done, that's the amount you're getting, regardless of whether it takes you 20 hours or 40 hours. The overtime issues are an exempt employee cannot perform non-exempt duties more than 20% of the time. That means if you have a management level person, they can't do clerical work other than 20% of the time. They cannot be paid at an hourly rate. And the nature of the exempt work changes over time. You must reevaluate whether they're considered exempt or non-exempt.
I have a question on the last slide, the middle bullet. An exempt employee cannot be paid an hourly rate and still be exempt from overtime.
Right.
So someone who is paid above that threshold, meets those other requirements, they have to be on a salary,
Yes.
not on an
Not
hourly.
on an hour.
Even if that hourly rate
Puts them
times
over
the
that.
number of hours that they're normally working exceeds that threshold. They have to be on a salary.
Right.
And
And the
I
only
don't,
exempt
okay, then
employee.
what about the still be exempt from overtime? I'm confused by that.
Okay.
So an exempt,
If you have an hourly employee, but they still make over $913 a week,
right?
but they're paid hourly, they're not considered exempt. So you have to have a salary of $913 a week. And if they are truly exempt by meeting all these tests, then it doesn't matter how many hours they work. They can, as I say, work 20 or 40, and it's based upon they get their work done. They are basically doing the job they were hired to do. It doesn't matter, okay, I want you here from 8 to 4, 8 to 5. Those are requested guidelines. It cannot be built into the job that you're going to work a 40-hour week. Or if you're half-time, you're only working 20. And be exempt. So what it's saying is that non-exempt qualify for overtime, but exempt employees do not. If they don't meet that $913 a week, they're not exempt employees. They are now considered non-exempt.
Right. But again, if you have an employee who's paid, well, if they're paid hourly and they work overtime, they're going to get paid for the overtime.
That's correct.
Okay. So if you have a salaried person who is expected to work 40 hours a week, whatever hours the office is open, and we really need you to be there. So that's the expectation. But they're paid less than that threshold.
Then they are non-exempt.
Then they're
And they
non-exempt.
qualify for
And then
overtime.
they qualify for overtime.
And they qualify for overtime.
Okay.
Yes.
If they make over that threshold, then
They,
they're exempt. And they-
only if they meet the duties test.
Right, right, the other test.
If you have just a clerical person, no, they won't meet that duties test.
Then they would be eligible for, required to be paid overtime. Okay.
I'm just going to go through the rest of these real quick. This is all in your manual. Okay, if you have any questions on it, just let me know. That's fine, I appreciate being here. The regulatory guidance on this is that Oregon exempt classifications follow federal. If there's a conflict between state and federal, the standard which most benefits the employee is applied, and certain organizations may be exempt from the LSA rules. These are important pieces. I'm not going to go through them. It is in your manual. But the one piece I do want to kind of go over real quickly is that one of them was the individual rule, that if an employee engages in interstate commerce, they are covered under this new LSA mandate. And what is interstate commerce? It's not just sending things out of state. It's telephone calls to out-of-state persons or business mail to out-of-state, handling records of interstate transaction, sending out newsletters to out-of-state recipients, ordering, purchasing supplies from out-of-state vendors, use of the internet to search out out-of-state vendors or other orders or any other type of function. You are accessing websites where there are out-of-state people used for registration, contributions, or ordering materials. Of course, in general, on-the-job travel to other states. And the tasks are performed at least once a month. So if you have a church secretary that's calling over to Vancouver for something and it's only once a month, they qualify. So basically you need to be aware that most individuals qualify for this mandate. The only exception is ministerial exception. They don't need to be compliant with the LSA. However, that person needs to be a church worker that has essential religious, spiritual duties that have religious values and spend less than 51% of their time on other duties. This is going to impact your youth ministry workers. You might have a youth director. You really need to take a look at what that person is doing to make sure that they are covered under the ministerial exception. Yes.
Well, so the impact of someone who is doing interstate commerce is what?
They are covered by this new rule.
Regarding the overtime?
Yes.
Okay, got it.
Yes, that's what all this is about.
Okay.
That's why I have more slides on that than some of the others, because it has a really significant impact to the churches. So you need to take a look at your youth workers and determine just how much essential religious duties that impact religious values they do. Because a lot of times they are taking kids on retreats. They're not spending a lot of time in religious education. So you need to go and take a look at those different workers and determine how much time as to whether, because typically they could be qualified under the ministerial exception, but they may not. The same thing goes, as I said, with your professional staff, organists, pianists. You need to look at how many hours they're working, and it might be 4 or 5 hours a week, and this is how much they're getting for that Sunday work, but if you're allowing a couple hours of practice time, they need to be compensated for anything over that time, because they no longer qualify to the 913 exemption. So that you need to take a really close look at, because they are not exempted. They never have been, and they're not qualified to pay just a lump sum to say, you're here Sunday, I'm going to give you $400. That doesn't work. Okay, there are rules for record keeping, and for both exempt and non-exempt, those in the manual. Here are some resources. That's not in your book, but basically it's government sites. If you were interested in this information and where this information came from, I can send you this information of the source. Other financial is unrelated business income, and the IRS Form 8822B. Unrelated income qualifies. Activity is a traded business, must be regularly carried on. It must not be substantially related to your exempt purpose, which is your mission.
Where does renting space and facilities fall in that?
Your space is typically exempt from unrelated business income.
Even if we rented to Doesn't matter who you
Unless-
rent it to.
Unless it's for a for-profit entity. If it is either a nonprofit or civic organization, then it is considered non-taxable income. However, if you do rent to a for-profit entity, then it does become taxable.
Then it's unrelated to business.
Right. The other one was the IRS Form 8822B. This is another requirement that went in effect January 2014, that you have to file the responsible party. And I gave you a copy of that form in the back of your manual. Any additional resources and references are listed in the back of the manual. And I have just one more thing I want to show you before we go to questions. I have resources, and I suggest these resources to you. There is a church administration handbook, which is put out by the National Association of Church Business Administration. The editor is academic and national, but you can find this online through the NACBA.net website. This is Effective Church Accounting by Richard Vargo. This is an older version of the book, but it's still very good if you want a solid foundation in church accounting. The Board of Pensions puts out a pamphlet called Understanding Effective Salary. So if you have questions on what do you include in effective salary, this is a good handbook for that. I also have, through Christianity Today's publishing group, called Church Finance. This is a very valuable resource because it's a kind of a question and answer. It has actual case studies in here, court case studies. And then what I call the Bible of church administration is the Church Encouraging Tax Guide. This is the 2016 one. This is put out by Richard Hammer as the church finances. He is the finance and legal guru for anything church related.
He'll be coming out with a 17.
They'll come out with a
version?
17. I'm taking orders now. It's
Okay.
through Christianity Today.
It is expensive.
It is expensive. This is about a $45 book, but it is invaluable. So I highly recommend this. Any of your questions, you're talking about the rental income, that's in here. He explains it exactly as to how you need to process your rents and what qualifies and what doesn't qualify under your position.
By Christianity Today.
By Christianity Today. Yes, ChristianityToday.com. Or it's under the Church Law and Tax Store.com.
Oh, it's on here. It's in here already.
Yes,
Oh, okay.
it's in the back of your,
Oh, okay. Thank you.
yeah.
So question?
Questions, if you have any questions, I mean, we're already past time, but I'm more than happy to stick around if you have any questions.
So this was the original question that I had. Okay, we're budgeting. And I have had a lot of difficulty proposing my budget expense for payroll taxes to actually come out looking like our real invoices do. So my confusion is what exactly is payroll taxing, especially with regard to the pastor.
The pastor does not have any payroll tax withheld. Okay, you do not pay payroll tax on a pastor because they are considered self-employed.
Right.
And then they have to take care of their taxes federally on a quarterly estimated tax basis.
Okay.
The only thing that you are required to pay payroll tax-wise for a pastor is workman's compensation and the WBF, the Workers' Benefit Fund, through the state of Oregon.
Okay,
You also, if you're in the Portland area,
yes,
you're in the TriMet district, you are required to pay on the federal portion of the salary for the pastor.
okay, now that was for, what did you say, for TriMet?
For TriMet.
Yeah, and we're outside of that. 'cause
They're outside.
Yeah, okay, so basically, the.
Workman's comp,
Yeah, got
it could
that.
be through SAFE or another carrier.
Yeah, that's for private, yeah,
You're not required to pay unemployment
okay.
because you're tax exempt from that for your pastors because of the ministerial exception. The other one is the WBF Oregon, which is the Oregon Workers Benefit Fund.
Okay. Thank you.
If I send you an email, can I get a PDF or a
I
soft
can get that.
copy of the handbook and the presentation? Okay, excellent. Sorry, I have to leave. I'm glad I came. Thank you very much.
Does Calvin need
Did the state unemployment tax on pastors' salary and housing change? I mean, at one point, some years ago.
No. You do not have to pay the payroll tax on pastor's housing or salary. The pastor is responsible for that. However, you may be, take a volunteer contribution of tax payment withholding from your pastor. You may say, okay, I want $50 in state tax and $150 in federal tax to be withheld. You report that on your OQ form.
Okay, but the state unemployment tax part of the OQ form,
You do not use because
Designate.
Interesting. Because if you have a former pastor who claimed unemployment and drew unemployment, it would seem that they wouldn't have been entitled to that. because-
they're not entitled to it from the church.
Okay. So the